And Brian, we do want to get your take on all of this, what potentially the next steps could be. And with the stock trading where it is right now, higher than your price target. I mean, we were talking about it last hour, this idea of maybe take the money and run. How do you see it?
Yeah, thanks, Morgan, for having us. Look, Twitter's board is in a tough spot. We do see upside into the high 50s if the board of directors engages with Musk, if they can get him to sweeten his bid. Not sure this is possible. He said last and final, and they have a poison pill in place. So, that's tricky. David, to your point, a strategic may be ruled out because of the regulatory concerns. And we did the math over the weekend to make a rough PE IRR work. We think you need a $60 to $65 bid, and that's a $40 billion check. That's big, and that assumes $12 billion in debt. So by the way, even assuming under PE guidance, Twitter can outperform and garner a premium on a re-IPO in 2025. That $65 bid only returns, and we say this tongue in cheek, just 21% IRR per our quick math. So it's not clear whether a PE plan would broadly differ much from the current strategy. So absent Elon's deal or a white knight coming in, the shares will be pressured, we think.
So if that's the case, then just break this down for me a little bit further. How do you get to $60 to $65 a share then if private equity or other bidders are not potentially coming in? Elon Musk is potentially the best offer on the table, and if he walks away, shares are under pressure.
So that's what an offer would potentially come in. That would be the upside. We don't see that as happening.
Okay.
And we see Musk's plan. We did some Musk math over the weekend and tried to calculate, does a freer Twitter make sense? A freer Twitter could drive faster user growth, faster engagement growth, and that would help out the direct response, bottom of funnel performance advertising that they do. But that's only 15% of Twitter's mix. 85% is branded advertising. And we think that increased engagement would not be enough to offset the branded pullback that you've seen if you opened up a platform to be freer, more freewheeling, and brands pulled back a bit on that type of content.
Yeah. Meanwhile, what do you think the current quarter is going to look like? There's plenty of rumors out there that say it's not going to be great, going to put even more pressure on the board, and of course, has raised that potential for the stock cratering if, in fact, Musk were to walk away as well. How do the current fundamentals look to you?
Well, they look fine, but I would say part of Musk's plan and part of the stuff we're watching very carefully is that subscription program, Twitter Blue, $3 a month. It's very small right now. It's not critical to their bogeys that they threw out there, right? And that's for 7.5 billion in 23 and monthly or monetized DAUs of 3.15 billion. That's ambitious. To get to those numbers, you have to significantly accelerate the average quarterly net adds that we're seeing. It's got to accelerate to 12 billion, and we're seeing 12 million, and we're seeing 5 million over the last 6 quarters. So hitting those stretch targets is going to be hard for the company as well.